All right, hey traders, TG Watkins here. It's August 28th when I'm recording this. Good to see you guys out there on the interwebs, so the social media. We got Facebook and YouTube out there, and then we also have everybody in the Moxy room. Just spent an hour with those in the Moxy room this morning, kind of looking around at the market for day trading and whatnot, and the market zigged when I thought it was going to zag, because yesterday I thought that the market was going to actually move down, and it looks like we got that move today. So always a fun time at the market, keeping you on your toes. Now, for those in the Moxie room, what I've been talking about and looking at is saying, hey, at some point, I think that the market might, or the S&P might fall below its hourly 50. I thought that was going to happen yesterday. It didn't. Now it's happening today. Okay, so that's kind of what we've got going on there. Remember, we do have Nvidia earnings tonight. Maybe somebody knows something. I think Emil, you were asking if what happens if somebody leaks the Nvidia earnings. I was like, well, then we might know. We should be able to see it. Maybe this is it. Maybe somebody knows something, and so the market's getting pulled down. That's a possibility. Or some people are just gonna start taking some chips off the table going into something like that. There could also be some other technical reasons. You're looking at the market right here on the S&P basically being up at all-time highs, just right there tied with all-time highs. And I always like to say it's kind of like a game of whack-a-mole. Like, who wants to be the first one up there making new highs? You go. No, you go. No, you go first. So right, like who wants to be the one buying the new highs and saying, yes, I'm going to lead the way up there? And I think that generally is what I see when the market shies away from just breaking out right there. It's like, okay, who wants to go up there? And so I think the market needs to kind of pull back, consolidate, digest, do whatever it needs to do before, if it's going to go higher, before going higher. And part of that is you can see that back here, we finally broke off the 15-minute 50. And now I think we're kind of setting up the same thing for price breaking off of the hourly 50. So if you notice, these two patterns are basically the same thing. One of them is just on the 15-minute time frame. The other is on the hourly time frame. And so now we just have to go along for the ride and see how far this thing wants to go and how long it's going to take and where it's going to go and all that kind of stuff. The other thing, let's see if one other thing I'll mention is, with price being this far up here, it's pretty much been floating off even the daily 8 EMA, which is quite far. And I think what we need to be seeing is if price is going to come back within the 8 EMA, maybe it's going to come down towards the 21 EMA. We're not quite sure, but definitely within the 8 EMA seems pretty reasonable because the market really just a huge move up from the carry trade lows. And that's what just has been propelling the market this far up. And at some point, it's going to have to take a break and digest and all that kind of stuff. And if we look at Nvidia, now anything goes with earnings. Anything goes. Nvidia could go straight up, it could go straight down, it could go sideways, it could do nothing. Anything goes when it comes to earnings. And so any of our technical analysis just goes out the windows when it has earnings as a thing. But leading up to the earnings, you can see very similar to the S&P, Nvidia ran right back up to its previous all-time highs and just stopped right there. And so again, game of whack-a-mole. Who wants to go first? Who wants to stick their head up there and see if the coast is clear? Apparently nobody. And what you're looking at is price just cannot engage with the 15-minute time frame. We've got the Moxy indicators here below zero, and price is at this point starting to weaken and slice through the hourly 50. So until we get new information, until the market says, yep, we're ready to go back up again, we should be viewing all of this as resistance, and we'll just have to see what the market wants to do about navigating that. Now, we've had a few people pointing out and mentioning the inverse trampoline moves on the daily chart. And what that is, for those of you who are not too familiar with the Moxy indicator, is when price is over the 50 SMA and the Moxy indicator is below zero, I call that an inverse trampoline move. Basically, it's either don't go long right now or it's a short entry. And as you can see some prior examples, here's price over the 50, Moxy indicator below zero. Over the 50, below zero. And even here, over 50, below zero. And you can see, gosh, even this one right there, price over the 50, Moxy indicator below zero. And in those situations, you can see, yes, they were definitely don't go long, especially when you start seeing things like this, like where it looks like price wants to keep going higher, but notice the indicators below zero, and you can see that that was a failure. So that was a fail on the long side. Sure, maybe it's a short. We need to make sure that if it's a short, that it actually sets up like that. But it can mostly mean, hey, if we're trading long, it means just don't go long right now. And so we have to be asking ourselves on the S&P and on something like Nvidia, is that what this is? Well, we don't entirely know until we see a little bit more confirmation, and we'd like to wait until after earnings. But what it can also mean is that it's got to kind of fix itself. And what that looks like is if we come over here, I'll show you an example right in through here. So you can see right in through here, what is that, November of 2023? You can see price over the 50, Moxy indicator below zero. It's telling you be careful on the long side. It's not quite set up. And so instead of shorting it, because, sure, you could have shorted it, yes, but really this was just a pullback in an uptrend. And so what you look at for this inverse trampoline move is like, well, it's got to fix itself. And what did it do to fix itself? It pulled back into support, held, and then the Moxy indicator fired. And that's what we're kind of looking for. That's what we need to see. Is that what's happening currently with this? Okay, so that's why we don't know. This could end up being the world's biggest short entry. Could be if price really wants to go down like this. But it could also mean, hey, not ready to go long right now. Maybe let's pull back a little bit. Let's retest some support, and then we go up again later. That's a possibility too. We just don't quite have enough information right here, right now. Same thing with the SPY. If we look in through here, and I can show you two examples, we have the same situation. We have price over the 50, Moxy indicator below zero. Oh no, is that a short? Well, maybe it's a huge short entry. We don't know yet. But it also means, hey, be careful on the long side right now. Probably not going to be ready quite yet. And you can see before it did the same thing. Here's price over the 50, Moxy indicator below zero. And it says, be careful on the long side, most likely going to pull back, something like that. But look what it did. Tested, support, and then we did get the Moxy indicator to fire. So that's what we want to see, is if this market's going to keep going up, that's how it's going to do it. We're going to most likely have to see some sort of pullback or flag into support to confirm it, and then see if the market continues to go back up again. All right, so on that, does the Moxy indicator work on mobile devices? It does for TradingView and for stockcharts.com, because those are both Explorer or web-based, so they're they're up on your browser. There you go, browser-based, and so it doesn't care what platform you're on. For Thinkorswim, the way that they have designed their desktop version versus their mobile version are two different versions. And so no, there are apps that are indicators that don't work on the mobile version that do work on the desktop version. So if you really want to be on mobile, whether iPad or tablet or your phone or something else like that, if you want to use the Moxy indicator, you're going to have to be using Stock Charts or TradingView, which we have a lot of people on each of those. All right, but for a laptop, if that laptop's still technically a mobile device if you want to. So laptop, Thinkorswim works just fine because, it's kind of the desktop version on a laptop for Moxy. All right, so we got that. And one of the other things that I've wanted, let's see, PLTR, we've talked about this one over the last couple of days. And yeah, so this is where we covered PLTR the other day and just said, hey, a lot of these things are super high up, really, really high up. Expect them to start pulling back. And you can see PLTR, the pullback is right there when it started to fail back below the hourly 50. And now we really just have to say, hey, how far down are these things going to go and how long is this going to take? And we don't know. We really just don't know. And that's what we're just going to have to kind of sit back, wait, watch, and see what's happening here. Let's see, Uni says Moxy only works on stock charts and ACP. That's correct. And ACP is not deployed for phones yet. Not sure about iPads. Okay, so from one of our subscribers, he's saying that the ACP version of stock charts does not work for phones, but it might work for iPad and all that. Okay, thanks. All right, so if we're looking in through, the other thing I wanted to look at is, let's look at some of the cryptos. Because last week or so, when the whole market finally found its low and bounced after the carry trade low, I did see that things like Mara and some of the other cryptos did start to move up. And I've had some questions over the week and saying, hey, how's Bitcoin looking? How's crypto looking? How's all that doing? And, did we miss a trade? Because you can see, yes, Mara did move up. But for me, this is still too early. Those of you in the Moxy room, those of you who understand the Moxy principles and everything I teach, you should be looking at this and recognizing the patterns of what I'm pointing out and saying, oh yeah, this does make sense that it came up off the lows, but it also makes sense that this is not quite ready. This is the first half of the move, right? So what we're looking for is a pullback of some sort, and we want to see if that pullback actually holds, that support test. Right now, I consider this just a move off of the lows, right? Here's the low, here's the move up. We don't know anything. All we can say for now is this is a bounce. What we need to do is it's always about the pullback. It's always the pullback that tells us where the strength is in the market or in these moves or anything else like that. I'll also show you SMCI, because if you look at this example on Mara and you look at SMCI, which is where I'll go next, you can see SMCI did bounce off its lows and then careened to the downside. Now, granted, it had news, but that doesn't matter. It's still in the charts and still in the patterns and what we're looking for. And that's why it's all in the pullback. If the pullback holds, great, then we can move up. But if the pullback does not hold, then you're going down like SMCI. So for Mara, you guys can see, not quite ready. And we've been expecting this. We've been waiting for basically this kind of pullback, and that's fine. And so what we need to do is start making sure we keep these things on our radar so that we check in with them, because since this is swing trading with equity, they take time to form. They take days. I mean, just look at this. How many days has that been? And so we're okay with this and watching this and saying, yeah, at some point, we'll just have to see if this pullback finds support and if it can go up. And if it never does, then it never does. And then we just move on, and none the worse. So there's Mara, and I'll show you SMCI since I was using that as an example. And you can see here, looks an awful lot like Mara, doesn't it? But this pullback kept going. That pullback right there kept going. This was merely a bounce until it wanted to keep going lower. And the Moxy rules and those Moxy principles are the things that I show and teach that help you understand and identify that. You can see here that this is the first half of the move and how to be prepared for the second half and what you're looking for in case this is going to work or not work. So I thought that was a really good case study example, case study. There you go. And so let's look at some of the other cryptos and see if they're kind of all doing the same thing. So CLSK, yeah, same kind of thing, just too early. This is why I have not been looking at these or touching these. You can see they're just too early. A little bit of a drift up and then pull back. Now, we don't know if this pullback is going to get worse or if this pullback is actually going to be testing support and then we move up. It's just too early to determine that. But CLSK is still kind of looking poor. Let's see, Cypher, same kind of deal. Not really doing much. Yeah, just really can't pick itself up off the lows in through here. Actually really not much to say about Cypher. Let's see, Irene, this was another one right in through here. And same thing, kind of looks like Mara. It had its first move up into resistance and pulling back. It has earnings. I definitely like to wait till after earnings. Same thing with Nvidia. And we're just going to have to wait. You can see that this looks a lot like SMCI. And so that's where we say we just don't know what this next move is going to be. And I'd rather not play it, especially with earnings, especially if I'm looking to the long side. It's just not quite there yet. So let's give it some time, keep developing, and see what we can do a little bit later. And I think for the most part, that is probably all of the cryptos that I'm really going to be looking at. We can look at slash BTC or GBTC, and you can just see that this pullback continues. Let me look if I extend these lines right in through here. You can see basically we're in a channel, still haven't broken out to the upside or to the downside. And so there's really just not too much to be concluded with Bitcoin in general. Just not much here, not much to work with yet. So let's give it a little bit more time, see if anything changes and what to do about that. All right, and then some of the other interesting names that I've come across, they're related to obviously into the home builder situation. We have Nail, which is the leveraged ETF of the home builders. Nice move up, pretty much because the idea of interest rates being cut is going to be good for the housing market. And so something like nail has taken off. And look, just again, like we talked about with the S&P, game of whack-a-mole. Here's your previous all-time high. Anybody want to stick their head up there? Who wants to be first? Anybody? Bueller? So a combination of a double top and also these things just ran a huge sprint. We got that really big pullback from the Japanese yen carry trade a few weeks ago. And then the market kind of decided, oh, okay, well, maybe it's not that big of a deal. And they are going to change tune a little bit. And okay, huge dip. Let's go buy up the dip. And so everything just bounced and ran right back up. And too much. It's a sprint. Like they just sprinted right back to where they were. They're tired. They're going to have to give this a little bit more time just to come in here, let them do their thing, and figure out if up is going to be the next direction on through here. So, yeah, just give that some time. There's nail. Let's see, Redfin, same kind of thing. There's been some moves. I like to wait till after earnings. So earnings was right around in there. And you can see there was actually a pretty nice setup. You got the Moxy price trigger. You came right into some moving average support and up it went. But you got to recognize when you are too far outside of these areas. I mean, look at this. All three of these that I'm pointing out here are essentially the same setup and same situation. So again, for those of you who are in the Moxy room, and this is the stuff that I go over and teach and show all the time, you can see just how visual this is, that hey, this is not a great place to initiate a long, or that you should be expecting some sort of pullback in through here. All three of these things that I've highlighted all have the same move, same structure, and same indication that tell you, yeah, it's probably going to pull back from here. And so that's what we're seeing with Redfin, and it shouldn't be too big of a surprise. Now, maybe if let's back this out a little bit. Let's look at the higher time frame. This might be doing something. These things might finally be seeing some new life. Now, it's a little bit early to say that because you can see here just how flat they've been over the course of several years. We've had a couple fake outs and false starts. Again, when I think that the market was expecting more rate cuts earlier, and so things like that tried to move up on that news. But now I think we're really legitimately getting those rate cuts. I think it's pretty much certain that we're going to be getting at least a 25 basis point rate cut in September, on the September FOMC meeting. There's been talk of 25 or 50% or 50 basis point cut. I don't know. My personal leaning is I think they're just going to stick with a 25. I think if they do 50, I think it's going to send the wrong message, especially for how much they've been dragging their feet on trying to talk about cutting rates and all this stuff and wanting to be right and wanting more data and all that kind of stuff. And I think if they do 50, it's going to show that they're what is it they know? If they cut 50, it's like, what do they know that we don't know? And why are they trying to get ahead of this so much? So I think 25 is most likely what they're going to do. And hopefully the market is satisfied with that. So Redfin, and then I even came across DEI. This is another ticker, Douglas Emmett, in the REIT, in the residential commercial area. So real estate, you can see in through here on a higher time frame chart. Now, this may not be the most exciting when it comes to swing trading or actively trading it, but if you look at this from a longer term perspective, stuff like this is actually starting to hold up and look pretty interesting. So right here, if you guys are kind of a buy and hold, or you're looking for something you want to hang on to through cycles or over a few months, or position trading, this is starting to look kind of like what I'd want to see from something that looks like it's about to move up. So those monthly, weekly timeframes look pretty good. Even if we come over here on the daily and the hourly, there was a pullback right around earnings. That's why I like to wait till after earnings. But you can see right here, look at that nice pullback into the daily 50 SMA. So yeah, pretty good there. And you can see even positive divergence right there on the hourly chart. So that's what we're going to be looking at a lot of different tickers and other indicators and seeing if, from the big move that we had off of the carry trade low. I know this isn't it, but it looks like that. We have a lot of moves that just kind of went straight up like that. Market got overbought. Let's see if it comes down, finds some support in through here, and if we start to move back up. Essentially, I think that's what we're getting with the S&P and the NASDAQ. We've had that really big move up, and now we need to chill out and digest this. And that can mean a little bit of a sideways before going up, a little bit sideways, a little bit down, whatever it needs to do. But I do think we're going to resolve to the upside. I think it's just a matter of time. But, I would probably be looking at something a little bit closer to the daily 21 as potential support. But as I said earlier, we're really just along for the ride. We're going to have to see what this market wants to do as far as digesting all of that. Okay, guys? So I'm going to be leaving it there. Remember, we have Nvidia after the market closed today. We have some economic data coming out tomorrow and Friday. And so it could be, well, actually, we could be getting a little bit more interesting. Hopefully we start getting some more moves because it has been just a little bit tiring in through here. Now, we had one decent move on Thursday last week, and then after that, it's been sideways. So, and then you get kind of these quick little moves in through here, which can pay. They can be nice, but they kind of come out of nowhere. So I'd like to see if we can actually get some cleaner setups, something that's a little bit more expectant, and when the internals actually support it too. I'll just show you real quick the internals. They weren't strong today, but they weren't exactly bearish. And so, a little bit of weakness here. This was kind of mixed. And honestly, the ticks until they finally dropped weren't really telling us much either. So we're just kind of in this chopped range where a little bit of capital can move the market in a big way. So good luck to everybody with Nvidia earnings. Let's see what they do. Let's see if that has any bearings with the market, and see if it's going to get things going again, or if it's just going to be like, oh, okay, we got that passed, but we're still waiting for something. All right, guys. So I'll see the Moxy group back in the trading room with you, and we'll see what we can do for, I don't know, either today or we're just going to have to wait till Nvidia after tomorrow. All right, guys.